Next question is question number 8, and while the title says financial planning, I think a more accurate description, more fundamental description is the question of valuation, okay? How do you value an asset? How do you value an ingredient in this case, okay? So what are we looking at? We are looking at a project that requires 400 kilograms of sugar, okay? And the key here is that we already have 150 kilograms at hand, and the remaining sugar needs to be purchased. Okay, so we have 150 at hand in the inventory, and the remaining needs to be purchased. With the remaining purchase price, it's very easy to value how much that's going to cost us, and therefore to plug it straight into any NPV formula or any kind of valuation exercise that we're going to do afterwards. That's going to be at the 53 per kilogram. Okay, so that's the current value. Each additional kilogram of sugar is going to be purchased at $53. So that's what the value of this 250 is going to be to us. I'll turn kind of, if we have $53, that's going to easily be converted into 1 extra kilogram of sugar. Okay, so that's going to be valued at $53 per kilogram. Okay, now the biggest question of this question is how are we going to value this 150 kilograms, okay? And so there's a couple of prices floating around here. So first of all, we purchased it, purchase price, at $55. And the question is this the correct way to value these kilograms of sugar? So in this particular case, it's more like a sunk cost. Okay, so you purchase this asset at, again, we ignoring all tax implications. For tax implications, that would matter, but for right now, we're ignoring that. You paid somebody $55 when this asset was valued at $55. Okay, so the moment you buy it, however, that value of that asset to you changes. Okay, and the best alternative use of that asset right now is not you won't be able to sell it back to the seller at $55. That's why it's no longer valued at $55. Okay, once again, if you could return it to the seller or find another buyer that would buy the asset at this sugar at $55 per kilogram, then yes, we would value this inventory at 55. The problem is, however, the market changed, and you can no longer find a buyer or resell this asset at $55. In fact, the resale market for sugar is kind of bad looking. You can only resell it at $40. Okay, so in the financial markets, we would call it bid-ask spread. Okay, so in this market for sugar, this bid-ask spread is rather large. For most of the financial assets like equities, it's a couple of cents, but for this particular asset, okay, it's large. So if you try to sell the sugar back to another counterparty, you will only be able to get $40 for that kilogram per sugar. A kilogram of sugar. Okay, so now the relevant value for us as owners of sugar is going to be $40. Okay, so once again, ignoring any tax implications as a write-off or any other reasons, we're going to be looking at the relevant value for us for that 150 kilograms of sugar is going to be $40. And therefore, the cost of sugar in this pastry project is going to be 150 kilograms multiplied by $40 per kilogram plus 250 kilograms times $53 per kilogram. Okay, and that boils down to $19,250, which is this price over here. Okay, so once again, the key here is to understand when this valuation is relevant versus this valuation is relevant versus this valuation is relevant. So for items in the inventory that we already have, for the kind of, again, ignoring tax implications, understanding what that value of the inventory is to us, we look at the best kind of at the liquidation value of that inventory. For how much can we liquidate that inventory? And this kilogram of sugar is $40. If we want to buy more units into inventory, we look at the current price that is prevailing in the market, which is $53. Historical price of $55 for this particular calculation is completely irrelevant.